In this episode, our spotlight is on the Tanzanian maize market, as it is one of the most important suppliers of maize in the central and southern parts of Africa. Well, in this week's episode, so make sure to stay tuned. Hello, Dr. Johnny van der Merwe here, and a warm welcome to another episode of the African Agri Overview, thanks to the support of Zimmatic by Lindsay and Comdi Grain Trading. Zimmatic's pivots and lateral move systems are truly cutting edge, combining top-notch components, exclusive designs and innovative features for a reliable, long-lasting agri solution. But with that said, let's jump straight into the latest news on the grain markets.
Welcome to all our viewers. This week we revisit the Tanzania maize market. As indicated before, Tanzania, Zambia and South Africa are the usual main surplus suppliers in Central East and Southern Africa. This year, Tanzania could play an even more important role. Both Zambia and South Africa negatively affected by the El Nino, while the impact on Tanzania is positive and a bumper crop and a healthy exportable surplus is possible. As always, note, all numbers used in our graphs and tables are our best estimates given information at our disposal and should be seen as such. There are very little statistics available on Tanzanian crops. Before we continue, let's look at current regional maize prices, which are unusually widely spread at this stage. The Lusaka price at $380 a ton tops the table and attracting rare imports from Tanzania. Both Kigali and Kampala around $200 a ton brings up the rear. The S&D maize picture for Tanzania seems overall healthy. General view, last year's crop, the 2023-24 marketing year, was significantly underestimated. A December Bank of Tanzania report indicated healthy government/FRA strategic grain reserves, underlining a healthy crop. Rains so far this season have been exceptionally favourable, in line with the typical El Nino trend. The long-range crop planting was probably completed by February, and early harvest should start May, with dry maize available from June-July. If normal weather continues next 2 months, Tanzania could reap well above normal short and long-range crops during 2024, i.e., another potential healthy exportable surplus likely for the 2024-25 marketing year, stretching from March 2024 to February 2025. Tanzania normally exports to Kenya, Rwanda, Burundi and the DRC. We believe both Malawi and Mozambique could be added to the export list next 12 months. Risky to try and project the potential exportable surplus, but we guess it exceeded 1 million tons during 2023-24 year and could be even bigger during 2024-25. The next graph illustrates the Tanzanian maize price history. Current price in Dar at $260 a ton, but the obvious question is where prices are heading. General view, the regional maize balance sheet could be tight the next 12 months, due mainly to El Nino, i.e., there should be a healthy demand for the Tanzanian exportable surplus. The main export destination, April to September, should be Kenya. Currently, Uganda supplying Kenya, but expectations, Uganda's exportable surplus should be depleted by late April. By October, Kenya should harvest their own crop, but then import demand from countries like Rwanda, the DRC, Burundi, Malawi, and Mozambique should gather momentum. Until September, export parity to Kenya should be an important driver of price. Present export parity Kenya around $230 to $240 a ton, marginally below the current local price, see the red line. We do not expect significant further price downside. Once the Kenyan import campaign switched to Tanzanian origin, expected next 4 to 6 weeks, there could even be some price support, maybe towards $280 a ton. With current lucrative exports to Zambia contributing, see the blue line, but unlikely to last. By June, July, the bumper expected new Tanzania long-range crop should commence harvesting and harvest pressure could drive prices lower during the harvest period. So, to summarize, the outlook sideways to higher short term, but potentially lower medium term. By October, when Rwanda, Malawi, Burundi and the DRC import needs should start to grow, prices could find support again. Next week, we will look at the Zambia wheat market. Speculation import levies could be waived soon, and this could see local wheat prices significantly lower. Remember, quality information improves decision making. Contact us for more detailed, tailored information.
Thank you, Jock. A huge shout out to our sponsors, Zimmatic by Lindsay and Comdi Grain Trading, for making these videos possible. Comdi is a seasoned grain trading expert in South Africa's dynamic marketplace with years of experience and a reputation for excellence. Comdi leads the way in connecting markets and facilitating grain trading across Africa and beyond. Comdi, your trusted partner in South African grain trading. If you'd like to advertise on these videos, make sure to contact me on the details displayed on screen. I'm Dr. Johnny van der Merwe, and thank you for watching, and remember to tune in next week for more on the African grain markets.